Welcome to Lender's Digest. I'm Alex Cooper. Today we're diving into a controversial corner of the financial world, payday lending. It's a topic that sparked heated debates and raised eyebrows in boardrooms and on Main Street alike. Let's start with the basics. Payday loans are short-term, high-interest loans typically due on the borrower's next payday. They're marketed as a quick fix for cash-strapped individuals, but critics argue they're a debt trap waiting to spring. Now, I've spoken with industry insiders who paint these loans as a necessary lifeline. They argue that for many Americans living paycheck to paycheck, a sudden car repair or medical bill can spell financial disaster. Payday lenders step in where traditional banks won't, offering fast cash without credit checks. But here's where it gets dicey. The interest rates on these loans are eye-watering. We're talking annual percentage rates that can soar into the triple digits. I've seen cases where borrowers end up paying more in fees than the original loan amount. Critics, including consumer advocacy groups and some state regulators, liken payday lending to modern-day usury. They argue that the industry preys on the financially vulnerable, trapping them in a cycle of debt that's hard to escape. I recently sat down with Sarah, a former payday loan user from Ohio. She told me, "It started with a $300 loan for car repairs. Before I knew it, I was juggling multiple loans just to cover the fees. It took me over a year to break free." Stories like Sarah's are not uncommon, but the industry pushes back, saying they're providing a service that meets a real need. They point to millions of satisfied customers and argue that without payday loans, many would turn to even riskier alternatives like loan sharks. The regulatory landscape is a patchwork. Some states have banned payday lending outright, while others have imposed strict limits on interest rates and loan terms. At the federal level, the Consumer Financial Protection Bureau has attempted to implement new rules, but these efforts have faced significant pushback. Now, let's look at the numbers. The payday lending industry is big business, generating billions in revenue annually. But it's also an industry in flux. Online lenders are disrupting the traditional storefront model, and some mainstream financial institutions are exploring their own short-term loan products. For those of you in the finance industry, this presents both challenges and opportunities. There's a clear demand for small-dollar short-term credit. The question is, can it be provided in a way that's both profitable and ethical? Some fintech startups are attempting to thread this needle. They're using alternative data and AI to assess creditworthiness, offering more favorable terms to borrowers while still managing risk. Traditional banks are watching closely, weighing whether to enter this space. As we wrap up, it's clear that payday lending remains a contentious issue. Proponents argue it fills a crucial gap in the financial ecosystem. Critics see it as exploitative and are pushing for stricter regulations or outright bans. What's undeniable is that millions of Americans struggle with financial insecurity. Whether payday lending is a solution or part of the problem is a debate that's far from settled. For Lender's Digest, I'm Alex Cooper. Stay informed, stay skeptical, and keep asking the tough questions.